We are talking about CBS. CBS is a system which is responsible for all the accounting which is done in a computerized form, and this has revolutionized the entire working which is done in the banks, because the entire softwares and everything that they have developed has helped a lot in the development of these areas altogether, right? So when we talk about the CBS, there are different areas where it is used, and I believe most of the working is now totally computerized. Hardly a few things are which are left. There are just the vouchers which are in the physical form right now. That too is required because if we are dealing with the other way round, then we need to know what is happening with our normal books and all now. What is happening, where's the documentation for it, where's the authorization of a person. If it's all computerized, how can we recheck it? Another important point. Then, what is a computerized accounting? Here comes the first question. It's a manual recording for business transactions. It is basically a system that captures and processes business transactions using a computer and accounting method without the use of financial statements or financial reporting without adherence to accounting standards. Okay, when we talk about this area, computerized accounting is basically the accounting which is totally working using a computer, where we are talking about using it for the business, and it is required. Even not every business can remain in that okay the business cannot remain in that way now. That is what we can do, is that we just follow the manual systems, because manual systems at one point of time might look cool, and but they're time consuming. Once the particular working becomes very exhaustive, when the working becomes very large scale based, so that's a problem which people face, isn't it? Then, what are the physical components of a computer known as software, hardware, peripherals, or instructions? When we talk about the area of physical components of computer, physical components is software, hardware, peripherals, or instructions. When we talk about the physical components, it's the hardware. The ones which can be touched is hardware. है ना? Then, okay, how is computer defined in context of electronic information processing? A device for generating inputs, an information storage device, an electronic information processing device with inputs, software, and high-speed outputs, a general purpose machine for financial reporting. When we talk about electronic information, for electronic information processing, it is very important. I think the answer would be C only. An electronic information processing device with inputs, output software. It's basically a system is what, if we define the computer, we are doing things by, it's a device base. It is based upon inputs. It is based upon the softwares as well as the high speed outputs. Now, if we talk about in computerized accounting, which of the following is a computer language that accounting software may be written in? English, COBOL, or then is accounting script or MATLANG? Among the following, which is a computer language? But basically in terms of accounting, not only accounting, there are many different types of computer languages through which the computers understand our commands. Once they understand our commands, they work in a better way. Of course, their working definitely becomes way better, because whatever we are telling them, they can run through the instructions, they can process the data, they can work upon the things in a proper manner, isn't it? So that's what we define under it. So then is it is not in English. It is not even accounting script or math lang. It is actually COBOL. That is COBOL. Okay. Then comes the next one, which is what is the primary advantage of using digital computers. Okay, now when we talk about primary advantage of using digital computers in computerized accounting, continuous data processing, yeah, it can be done. Currently, I think if we talk about it, the banks are now working kind of round the clock. I can make an RD even in the night. I can transfer my money at 3 a.m. in the morning. I can open an account at any point of time at any place. There's no problem in doing that. You know, that is, uh, you don't have a problem in doing any of these things. So we have a continuous data processing. It's a high speed arithmetic operations. Use of COBOL language, of course, it is used, but that's not an advantage, right? This is where the questions gets a little troublesome, because if you are not gone through the particular topics properly, you will feel you don't have to do it. But in this case, you will have to understand. You have to find the question the question, what exactly the question is looking forward to. Then is scientific and mechanical processing. When we talk about the primary advantage of using digital computers, it is we are having high speed arithmetic operations. Okay? So in this case, the correct answer is going to be high speed arithmetic operations. Then what is the key advantage of computerized accounting in terms of generating reports? Limit report options, time consuming report generation, inability to prepare informative reports, or various informative reports can be generated quickly. Again, it is easier. The question could have been made a little more difficult. When we talk about the key advantage of computerized accounting, one of the strongest point is we don't have to uh, prepare all the things manually. We put up all the information in the banks, right? We put up all the vital information and whatever we are dealing with, ultimately you get the particular point of the working in a simpler manner. So this is possible only because we are following this specific method, that is we are using computers. When we are using computers, it becomes super easy that the organization can work upon their uh, data. They can work upon their overall, not only the data but systematic way of working. Everything is possible by following this. So there's very informative information, can reports can be generated, and those reports are as per the required formats only. That's because they are following it. You know, they just put the data inside it, and when it has the data, there is no problem in working, isn't it? Okay. Then comes the next question. What do you mean? How does a data file? The question says, how does a data file define? How is a data file defined in computerized accounting? How do we define it? How is a data file defined, everyone? Compilation of unrelated data records, then collection of hardware components, then related data records maintained in a in some pre-arranged order or group of data items related to an object. What would be the answer according to you? When we talk about data file is everything which is in a tabular form and it is connected. So can I say the answer is going to be group of data items which are related? Data file is basically if I have noted down the name of all the bankers who have enrolled in JIIB and who is going to appear in 2024 May attempt. So in this case, what's going to be the answer? Technically, the related data records. Acha, in this case, the answer would be C, which is nearer to the point. Related data records maintained in some pre-arranged order. It is maintained in a pre-arranged order. And now the answer is C. Then comes the next point. What does the term LAN WAN stand for in context of the computerized system? This is again when we're talking about the era of the technical terms of computers, right? This is actually a very simple term though, but go ahead and try it out. It says local and wide area networks, then is linear and wide array network, and logical and wired access network, or limited and widespread access networks. What's the answer according to you? Basically LAN and WAN is linked with the internet connections overall, na? So that is, LAN is basically linked with the wiring and all. So basically it is helping us, the organizations, to connect us, to stay connected with the main servers, to do everything in terms of in the form of the cables and all. So in this case the correct answer is going to be local and wide area networks. Now comes, what is the real concern regarding the integrity of accounting data within a computerized database? Physical damage, spectacular computer frauds, lack of computer peripherals, or complexity of computer language. Real concern of integrity of accounting. Basically, one of the basic problems that I think everybody is correctly facing is frauds happening. What is happening? You get a random OTP, you get a random call, you pick it up, all the information that is there in your phone is transferred to the other person and they take out the money. I think there are so many frauds that have happened with people who didn't even know. And specifically, they had been targeting old people because they don't have any idea about technologies. And then those who do not have that technology-based idea, they will be asking for OTPs and everything. And then boom, they are just taking the entire money out of their pockets. And that too hard-earned money. And tracing these people down is very difficult at times because their IP addresses and everything is just not traceable. So these are spectacular computer frauds. Matlab, these are not small frauds. What they do is a higher level fraud. And when they do all those higher level frauds, they get a lot of money and they are just vanishing in thin air. Nobody knows where they go. But the people who face it, they face it very badly because the banks do not take the responsibility of that particular task because they are maintaining their security while the person has no clue what has happened with to his account. So in this case, nobody can be held responsible, neither the person nor the bank, but the person who would have done it to recover the money to find them up is another level of challenge. That's why it is said that people need to take care of their belongings. Then they need to be more vigilant. Who are they talking about in terms of their banking information? Right, because if we talk about giving my Aadhaar card number to anybody randomly, what will happen? The person will have the details of so many things altogether, no? The person will have the details of the class of the particular vehicles that we own. The PAN number can be found out. The total overall money can be found out. The property that the person owns or is in her or his name. All those things can be done, no? So basically this is so dangerous. If you do not use your these information properly, then it can be a troublesome situation for both the persons. That means if there's a spouse and the spouse, then if it's related to your parents, then it will be the same manner as well. So technically the very first problem is the spectacular computer frauds, which has made the particular fear coming up, that what is exactly happening in this case. That is, it's a spectacular computer fraud. What is the primary requirement of computerized accounting system to carry out accounting operations? Special stationery, qualified staff, traditional books of accounts, or special programs written in by programmers. What is the primary requirement for computerized accounting system? Special stationery, qualified staff. Then, when we talk about this area, we need to carry out all these things by what? What is the primary requirement? You need special programs which are written by programmers, but they have to be prepared as per what? These have to be prepared as per actual accounting standards which are being followed. Whatever is in practice now, we have to follow all those things all together. Otherwise, there would be a major problem, right? Then comes the next point. Apart from the traditional books of accounts, what other costly items may a computer require in a computerized accounting system? Expensive furniture, then advanced computer language, costly computer peripherals and stationery, or specialized staff training. What would be the answer according to you, everyone? When we talk about this era, other than the traditional books, when you require all these costly things, the problem is that we need a lot of computer peripherals. For example, if I'm taking your classes, what is it that I need? I need a WAN connection. If that is not working, then I need LAN connection, right? Normally in houses we have a LAN connection or we have Wi-Fi, right? And then we have it's if it's a small organization, maybe even 10 to 20 people are involved in it, then even you need the computerized system of accounting because it is not possible for one particular person to write down the journal, then uh, write down the ledger, and then the trial balance and the further financial statements. It takes a lot of effort to do all that, right? So that is what they had been talking about India. In terms of the accounting and everything else, this is what we have talked about in the CBS itself. That is costly computer peripherals and stationery. Since we have talked about all these things, this is not true that these organizations where the entire strict computer systems are working, the things are very bad. The things might been exposed to frauds and might have been uh, seen a little part of threats and all, but still the computerized system is better, safer, and has more speed than anything else. Right? Here comes the next question, everyone. Visible now? Okay. Now, what is the next point that we're talking about? We have talked about, acha, what does the software do in case of an entity with operations in the foreign countries regarding currency conversion? What would be the answer according to you, everyone? Manually calculates currency rates or ignores currency foreign currency transactions. It cannot do that. Converts foreign currency to Indian rupee based upon the specified rate of exchange or skips currency conversion. It cannot. The manual calculation is also not required. It is based upon whatever the current price would be. We are going to consider that current price and we are going to uh, gather all the information accordingly. That is what that is the current price going on. What should be the spot rate in this case? So the answer is actually C. Converts the foreign currency transaction into Indian rupee. Then, in the case of an entity with branches all over India and abroad, what tasks does the software perform? The only maintains accounts of the heads, ignores branch accounts, maintains accounts of all branches, and head office prepares the consolidated trial balance and the financial statements. It excludes the preparation of financial trial balance, consolidated trial balance. What is going to be the answer according to you, everyone? Just a moment, I think. Now it would be visible in a better way. What's the answer in this case? When we are basically talking about an entity which has branches outside India as well as abroad, and what tasks does the software perform? In this case, what's going to happen is if you put money into the any branch, the entire account wherever you have it, your head office and everything else, it is updated altogether. You know, it technically maintains accounts of all the branches and head office. It prepares a consolidated trial balance as well as a financial statement. It prepares all these things. So in this case, the answer is going to be it maintains accounts of all branches and the head office. It prepares a concerted trial balance and financial statements. Overall, it is preparing all the books of accounts, isn't it? Then what is the one advantage of computerization of bank regarding deposit operations? Increased complexity, time consuming operations, ease and convenience, and dependence on physical records. Which is the advantage of computerization? Computerization has major advantages because of that there is no complexity which has increased, though it is complex on the part of software but not in the working. Time consuming operations they were earlier. Now the one particular place is updated, the entire books of accounts are done within no time. Then easy and convenience of in operations and accounting for deposit accounts and dependence on physical records. There is no dependence on physical records. So technically, due to these accounts, the organizations can gather a lot of information and they can work in a better way. That is ease and convenience in operations. Next is how does computerization contribute to the lending function? Increases paperwork, complicated interest charging, facilitates charging interest, monitoring disbursements, delaying inspection of the unit's repayment schedule, and delay of loan disbursements. Lending function doesn't make it a delay, and less paperwork is there because you have everything in the system itself. It does not complicate it. it rather uncomplicates it, because your date of issue and then the closing date of that year is automatically noted. You don't have to note down the opening values. It is directly taken from there. It is basically carried forward. So in this case, the answer is C. है ना? Answer is C. Then what has automated clearinghouse functions allowing quicker credit to customers after RTGS introduction? Automated teller machine, check truncation system, traditional check clearing, or manual check clearing. What would be the answer according to you, everyone? What would be the answer? You're talking about automated clearing houses, allowing quicker to the customer to do RTGS. To have RTGS, the best thing is the check truncation system. You can do the RTGS at any point of time without any problem. So, right, it has taken the place of all the checks, and all people have started following this a lot. One, we are done with the module B altogether, right? Currently, we are done with the complete module B. So, what are we going to do today? The point that arises is the today the specific class is meant for only one thing, that is to revise entire module B. So obviously now when we talk about the entire module B, there would be questions from different areas today that I'm going to cover up. So let's move on. Acha everyone, at the same time, if you like this particular series, then please go ahead and like each and every class, because that particular thing really is a source of motivation for me. Secondly, please keep on sharing this particular session among your peers, because your support definitely means a lot to me as a mentor. Whenever anybody is appreciating your work, definitely you feel way better about it, right? Okay, then let's move on. Here comes the first question. The question talks about which one of the following statements is correct about the minimum paid up capital of a company. 1 lakh for private, 10 for public, 5 for private, and then we have no minimum paid up capital. If you talk about Companies Act 2013, now before that it was there. Before that it was there ki the minimum capital requirement was there. So every organization had to do this. Now there is no such thing. Now it has been removed, the entire situation where there is a minimum capital required. Right now no minimum paid up capital is prescribed. Okay. Then comes the next question. What does the share capital represent in a company? Total revenue generated, total assets owned by the company, total amount invested by the shareholders, or total liabilities of the company. When we talk about this area, what are they talking about? What does the share capital represent, everyone? Share capital is basically the money which a particular person invests in the business, and we call it equity. You know, this particular term is called equity. Correct? Now let's move on. We have total amount invested by the shareholders. So basically whatever money you and I are putting into the business is covered in this scenario. Now comes, this is a practical question. Following amounts are payable by the person, that he has to pay 3 rupees on application, 2 on allotment, 2 on first, and 2 on final call. X is holding 500 shares, paid only application and allotment money. Matlab he paid application money, then he paid allotment money, and Y holding 400 shares did not pay the final call. Acha, we have done this question earlier, but let's discuss this again. He has paid these two, matlab his 4 rupees are still left per share, है ना? And at the same time, Why did not pay the final call? Why did not pay the last 2 rupees? So what did he not pay? 800. And what didn't he pay? 2000. So technically, combined the entire amount which is unpaid in the organization is of Mr. X and Mr. Y. Acha everyone, if the particular persons, both A and X and Y, are unable to pay their amount, what will happen then? If both these parties are unable to pay the amount, then there would be only one decision that would be taken. That is, these two people will be eradicated or striked off from the company's accounts. They would be written off. They would be striked off in the form of forfeiture, everyone. Okay? Done? Now let's move on to the next point. That is 2800. The question says the premium received in terms of issue of shares is shown as. Everyone, the premium received on the issue of shares is known as, is shown on which side? The premium received on issue. Whenever we are issuing shares, we ask them to pay for more. Equity and liability is part of balance sheet. Debit side of P&L, credit side of P&L, a part assets, part of the balance sheet. What would be the answer in this case? The premium that is received, this is basically when the share is being issued, extra money is charged because we say we have a goodwill in the market. So in this case, it's basically a part of the equity and liabilities portion. In the shareholder funds, you write another reserve which is called security premium reserve. The extra money that you receive due to the security premium goes into the security premium reserve. Okay? What do you mean by forfeited share, everyone? Not be reissued at discount, reissued at maximum discount of 10%, be reissued at a maximum discount equal to forfeiture or none of the above. In accounting, as per Companies Act 2013, any company, that means no company is actually allowed to issue forfeited shares. At no, I'm sorry, no company is allowed to issue shares at a discount. Discount is not allowed. If you are giving forfeited shares, na, then in case of these forfeited shares, whenever there is a forfeiture, someone had paid 6 rupees out of 10 and then they didn't pay further, so their name was strike off. So now if you want to give the same shares to someone on whom you've already received 6, you ask the particular company person to pay 7 rupees, then he is paying 3 rupees less than the face value. That is adjusted because the person previously had paid 6 rupees and your discount is lower than the amount that you have got. Got the idea, everyone? Then look at this, everyone. When we talk about the area of discount and forfeiture, if I bought a particular asset for rupees 10, I bought a particular share, then but I paid only 7 rupees. So 3 rupees is still pending. So after a certain period of time, when I am unable to pay, the company will write off my name and the entire money that they have already received is rupees 7 on that particular thing. So then from the next person, the charges that they can get is maximum discount of the remaining amount that he couldn't pay. That is forfeiture, everyone. If the previous owner is not able to pay, then you pay that part. If it is 5, then you give the remaining 5. If it is 4, then you give the remaining 4. That is how the customization of these kind of properties are valued at times. And everyone, the answer is be reissued at a maximum discount equal to the amount forfeited. Whatever amount is forfeited, it would be considered in this area. Done, everyone? Here comes the next question. Those preference shares which do not carry the interest rate to receive arrears of dividend. What do you think, everyone? Those preference shares which do not carry the right to receive arrears of dividends. Arrears means. Done, everyone? What would be the answer in this case? Those preference shares which do not carry the right to receive arrears. If we talk about right to receive arrears, those are basically those amounts which are pending and the person hasn't paid it. So in this case, non-participating preference shares, irredeemable preference share, non-convertible or non-cumulative. Whenever the person says which who do not have the right to receive. Do not have the right to receive means when we talk about the if the company has is about to give the shares, the company faced a loss in that particular year, no one will get the part of profit. But later on, if they get a loss, then they will not get it. If they get a profit, they will get it. Or if they are not able to pay in one particular year, in the next year they will get double because the last year amount was still pending. This kind of thing happens only in case of which do not carry the right. Now in this case they are saying that this particular portion does not have any uh, uh, they do not have the right to receive the arrears of dividend. Who are those people? In this case, the correct answer is non-cumulative preferences, the one which cannot be collected. And everyone, that is non-cumulative. That means you cannot accumulate or keep together the preference shares. Then, now in this case, which one of the following is not a list of the statements which form the complete set of financial statements as per Ind AS 1? Statement of changes in equity, statement of changes in assets, statement of P&L or comparative information in respect of previous accounting information. Which of the following is not a list of statements, everyone? When we talk about the is not a statement, first is equity, assets, P&L, they all are. But when we talk about the portion, there is one thing. These are not shown separately. And everyone, because the statement of changes of assets is not shown here. It is just something which talks about the increase or decrease in the wellness of the organization because we want to find out how much assets are there in the business and how much they do not have. Then next is which one of the following entities is agreed to required to represent consolidated financial statements as per Ind AS 110. Which one of the following entities is required to represent consolidated financial statements as per Ind AS 110? All companies having more than one division, all government companies, entities that control one or more entities, or all companies are required to represent consolidated financial statements. Consolidated financial statements are those statements where one particular company has control over the other company. If you have a control over the other company, then what will you do? If you have a control, then you will not allow the other company to work in a matlab you have actually all the kind of control over the other company. So in this case, whenever you have a control over the other company, you win over the company, because everything that is happening in the business is because you have a control. So technically, na, you prepare your balance sheets, you acquire their balance sheet too. You are also including their balance sheet into yours, and that is how you control. That is how entity control one or more entities. AS 110 is related to that only. When we talk about for the purpose of cash flow statement, which one of the following is considered as financing activity? Issue of fresh capital, processing of goods, redemption of debentures, sale of manufactured goods. When we talk about financing activity means those activities where you are arranging the funds for arranging the funds for financing the business. When we're talking about financing the business, how do we do it? In terms of financing the business, we are having issue of fresh capital. Yeah, this is where you are getting the money. Processing of goods is basically operating, not something that we have to choose. Redemption of debentures means you have paid. This is not in the question there, which one of the following is considered? Actually, two of these are financing activities. First as well as third. Rest two are operating. So any of these, if you have chosen, is the correct answer. Redemption of debentures is a long-term loan which the company would have taken and is paying it off. For the purpose of preparing the cash flow statement, which one of the following is considered investment activity? Buyback, redemption, manufacture of goods, or disposal of machinery. When we talk about investment activity means that activity where you are involved in your long-term business. When you're involved in your long-term business and you are bringing something good in the business, it is where you are disposing your machinery, you are disposing an asset. So that is what we consider as this. So in this case, the correct answer is disposal of machinery, which is an investing activity, everyone. Next point, the rebate of on bills discounted refers to concessional rate of discount on priority sector, rebate provided to priority sector banks, then unexpired discount, or none of the above. Rebate on bill discounted. What I did was I sold my bill to the bank and bank gave me money. So when gave me money, I'm using this money and I'm using this money into my business. So this particular thing can be called okay, now I had 10,000. I wanted 10,000 rupees. This was the bills receivable. I sold it, rebate on bill discounted. Acha, this is where you pay in terms of the amount earlier. Bill discounted is basically the amount where you are selling it to the bank, and rebate is basically the portion when you have unexpired discount. Matlab the discount which is not passed on to you yet. Unexpired means that rebate on bill discounted when there is a bill discounted and the person pays before time, then it is called unexpired discount. Then operating expenses shown in one of the schedules of profit and loss account do not include law charges, printing and stationery, payment to employees, or interest expenditure. P&L. P&L includes legal expenses. P&L includes profit and loss. It includes the amount which is payment to employees. Operating expenses, na? Achha, this is operating, this is also operating, this is financing. Achha. The area of interest, because interest, if not said, it is always finance based thing. Na? So that means we are lending money or we are taking money from someone. So the answer would be interest expenditure. Done, everyone? Now comes the next point. For the core banking system of a large bank, which one of the following is true? Which one is true, everyone? Each branch has its own server, right? Then each branch has its own server directly connected to the servers of other branches. There is only one powerful server, centralized data. Each branch has a server connected to the server of centralized data. Basically, now each branch has this. Every branch is going to connect to the different areas in terms of the data. So that means you are having each branch has a server which is directly related to the center. Done, everyone? Okay, then comes the next point. Which one of the following statement is not correct regarding computerized accounting? Computerized accounting, okay. It business transactions are captured in accounting entries. It is true. It offers speed and accuracy. Again, it is true. Higher cost as compared to human is a disadvantage of it. Mostly digital computers are used in computerized accounting. In this case, I think in terms of computerized accounting, it is actually C. There is no higher cost as compared to the human labor. No, there is no higher cost. This is way more beneficial in terms of working. It is not a disadvantage. It's an investment that you are making. This particular person that is in the form of a human machine and all, it is going to help the company to grow further, isn't it? So in this case, the correct answer is C. 7. My name is Niharka Walia Bhatnagar, and I am with you with the area of AFM, that is Accounting and Financial Management for Bankers. Okay, so what are we doing today? We are done with our module B, everyone. I hope you have done this particular topic well. What am I going to talk about today? I will be talking about the revision of the module B. Okay, so let's talk about the module B. Conversion of loan into equity results in change in both assets and liabilities, change in total assets, change in total liabilities, or change in liabilities but total liabilities remain the same. Acha. Now, what is the balance sheet equation? This seems to be a balance sheet equation question where we have assets is equal to capital plus liabilities. You know? Acha, everyone, if you had been following this series from quite a long time, then once I'm done with module B, I'll move to module C after that. Okay, number one. Number two, when I'm talking about the series entirely, we're done with the entire module A and we're done with the module B as well. So first of all, please go ahead and share the session among your peers. And if you haven't liked it yet, then please go ahead and like it. And now subscribe to our channel as well so that you can get more information about these examinations. Acha, everyone, our new batch for JIB is also starting. The resolution batch is starting from it is starting in this month itself from 10th of January. So enroll yourself before the batch starts, because again, if you join in advance, then one particular thing is for sure, that is you won't miss anything regarding the class. But if you join it a little later, that's the only problem that you might face, that is the time. Might not be getting enough time there, you know. So it's better that you join it in advance so that by the time the classes are there, you are relieved enough ki, "ठीक है, I can go and attend the particular classes as well as take care of my office as well." You know? So that's a little advice for you regarding the examination. Acha, what's the next pointer? Conversion of the loan. Now we are talking about assets is equal to liabilities plus capital. Acha, the question has said that loan is converted into equity, you know. So in this case, what should I do? The loan is a part of liabilities, you know, and equity is the capital. If there was a loan and you remove this loan the total loan was of 10 lakh, out of 10 lakh they said 8 lakh is converted into equity. So technically you will remove 8 lakhs from here and you will add 8 lakhs here, right? So you're gonna, the total liability side is the total is same, है ना, but the difference is in the values. So can I say there is a change in liabilities, but the total liabilities remain the same, right? So that's the point number D, everyone. Acha, next is repayment of loan results in change in both assets and liabilities, change in total assets only, total liabilities only, change in liabilities, but the total assets remains the same. Uh, Repayment of loan results in. Acha, I'm repaying a loan, putting it into the same situation. This is my asset. How do we build up our assets? That is capital plus liabilities. You know, so if I'm talking about this area, repayment of loan, I repaid the loan. What would happen in this case? Repayment of loan results in repayment of loan. Uh, okay, I'm talking about repayment of loan. If I'm repaying the loan, my liabilities are going down. For example, my borrowing was again of 10 lakhs. I think the same question. That is conversion. This is repayment. So I'm removing 8 lakhs from here. Let's take the same amount now. But at the same time, repayment means what? I'm paying in cash now. So one thing is the amount is moved from the liability side, but also from the cash. So technically, it is both assets and liabilities. And ultimately, the LHS is equal to still RHS. Assets is still equal to capital plus liabilities because both the sides have gone by the down by the same amount. Decrease by same amount. You know, done. So answer is change in both assets and liabilities. Acha, next question. Which one of the following is correct about the methods of valuation of closing stock permitted as per Ind AS? In our books, na, they have given LIFO, FIFO, and weighted average. LIFO, FIFO, weighted average. There are many other methods as well. HIFO, then this is highest in first out. There is, I think there are almost 10, 11 more methods. Other than HIFO, na, there is still a lot of other methods. The simple average based. This is weighted average. There is simple average as well. There are other different methods which are used. But the point is, when we talk about AS, na, AS has always been biased. They do not believe in LIFO somehow because they say that LIFO provides wrong presentation. So it permits only LIFO method, it uses only FIFO method, it permits use FIFO and weighted average, and it is silent about the valuation. It is never silent. That's one particular thing that I would like to state. They are never silent. Be it AS, be it NDS. Both had been very much vocal about the method which they do not want to use. According to them, LIFO was just not meant for it. It permits the use of FIFO and weighted average. Problem is, in terms of inflation, which is a common problem in India, inflation is something which doesn't cover the LIFO method because LIFO during inflation gives false um, presentation. I won't say it's fraudulent, but it is just too much exaggerated, which is definitely wrong. Think, if we talk about the money which is going out of our LIFO is what? Last in, first out. The last good that went out due to inflation, its value was too high. So what happens is the amount of sale in terms of the cost, your cost seems too high, your profit seems too low, and then what happens is that you according to the books of accounts you are making lesser money, while if we talk about LIFO, the goods you have purchased earlier, the value at that point of time would have been lesser rather than being more. You know, at that point of time, the value would have been lesser. If I bought something for 10 rupees, due to inflation, its value is now 100 rupees. And this has happened with multiple things. You know, so then, nahi, chalo, let's take it. I bought it at 70 rupees, and right now its value is at 100 rupees. In the books of accounts, when I'm showing the issue, I showed it in our country. This kind of inflation is definitely there. from 70 to 100 movement of the money there. Now the point is, I bought it for 70, now it is sold for 100. Now if I show my goods which are used for production, the value is utilized as 100. So technically 30 rupees profit is just not visible, because I am going to show that the good which went out was rupees 100 only. But technically what happens? We will always use the 70 wala first na, because if inflation is there, I will sell it at least 140 to 150. Only then I'll make a profit, because currently if I'm buying the goods it is at 100 rupees and sale would be at a higher price. So technically if I'm selling the 70 wala stuff, this is currently at 70 rupees profit. Your profit is of 70 plus, while the goods value is of 100 rupees currently. And you'll be showing ki nahi nahi, the profit is just of rupees 40. So aren't you having a situation where your profit is shown at a price which is not true? Isn't it? That's the reality. That is why LIFO is something which doesn't work in inflation. During inflation, it shows pathetically wrong results. The results are definitely not reliable. So ultimately, they say कि ठीक है ना, if it is not reliable, then let's not keep it, because weighted average and inflation, weighted average as well as the second one, that is FIFO. These two methods are very sorted about these things. Done, everyone. A firm has received advanced rent from the tenant for the month of April. In March, acha, now the money of current year was last received in last year. Sorted. Which of the following adjustments entries is correct while preparing the accounts for the year ended 31st March? Acha, debit advance rent received and credit rent received account. Acha, one particular thing that I first of all everybody has to think, not only me, but when you talk about I'm receiving money in the month of March which belongs to April. मतलब technically these are advances. Number one, है ना? These are advances. Secondly, when we talk about advances, what happens in case of advances? If we received any sort of money in advance, what's happening? The liability on your head. And the taxation regarding the same should be there in the year in which it accrues. One thing is sorted. So this is in the month in which it accrues. है ना? So what will you do in this case? Done? अच्छा. Now, what should we do in this case? One particular thing that I know is this is a liability. In terms of a liability, what can I do? This liability should be written on the credit side. बोझ है ना? It's a burden on my head that will put me down. So one particular thing I have to look forward is credit advance rate and credit advance rent. Achha, both of these are correct. But we are receiving the rent or paying? We are receiving. So that means this is just not correct. This is correct. Matlab, every time the bankers had been asking me na, कि ma'am, how do we get the correct journal entries? There is only one cue to it, everyone. You know what is it? Whenever you are dealing with these kind of questions, the only rule that we have is whenever we are dealing with these kind of things, the only and only rule is you remember or half part of your entry should be correct. If you can identify even single part of the journal entry, na, because there are double, so there are debit and the credit side. If you can deal even with the debit side, the credit side is something that you'll figure it out. If you figure out the credit side, you can figure out the debit side, because this is an MCQ paper. MCQ means you get the idea of the options. So whenever you are dealing with the questions, you should not be pressurized with the fact that nahi, I should be totally correct and it should be the point. Don't worry. Think about these questions from the point of view of being a layman. and you are into the finance field in any case, you agree to it or not. Maybe you would say that I belong to the area of engineering, I belong to the area of arts, but you had been giving your life towards the area of banking. Probably many of you would have already given 3 to 4 years, 5 years in the area of banking. Many of you would have given, I had seen bankers who had given 20 years of their lives towards this, and then they start thinking, "Ki I would like to go for JIB and CIB now." So you are into finance, you had spent a good amount of time in finance. You just have to get confident about it. कि ठीक है, I know about this and I would be able to grow further. Okay, now which one of the following is not a feature of joint stock company? Joint stock companies are what? These are basically companies which we talk about. These are basically companies, na? Companies in the form of what? Uh, when we talk about the companies, company has its individual presence in the market. It is basically a legal type, you know, just it has its own pan card, it has its own bank account, it can purchase and sell um, property in its own name. All those things are there. Which one of the following is not a feature? It's an independent legal status. I just told you it has its own pan. So this one is correct. And they're talking about negative pointer. Common seal is mandatory to be fixed. Common seal is something, a kind of a seal kind of thing that you put on the particular documents. Okay, many of you would have seen that earlier now when there used to be the kingdoms and all. Every kingdom had, the king used to have a specific stamp kind of thing, which was in Hindi they used to call it Rajsi Mohar. Mohar is basically the stamp. So then they used to put that particular stamp in order to show the authentication by the king himself, because obviously he couldn't sign in everything. No? There was a seal kind of thing, and that too was in possession with the ministers only. So the common seal is affixed by the companies even to show that the company has signed it, because company is not a man. Then members liabilities limited, one of the coolest feature. And the next point is it has a perpetual succession. Perpetual succession means men may come and men may go, but the company is here, at least in the near future. You cannot say that the company is here to die. Why would someone spend so much of time to formulate a company just to see it liquidated? Making of a company is tough, and liquidating a company is way tougher. Reality. Now, the point is these 3 points as per the Companies Act, the Companies Act 2013, these 3 points are absolutely correct. The point where they vary is common seal is mandatory. It is no more mandatory. Now the one working, the whole-time director and one managing director, both of them if signs, then it is equal to an authentication. That is managing director plus any whole-time director, any director which is working every single uh, year. Matlab he's working in that particular year wholly, not in a partial way. There he's not just not there for the sitting fees and board meetings. He's there with the management in terms of working. So that's what they cover in this area. Nanji. Then comes Food Corporation of India is an example of statutory company, chartered company, private limited company, holding company. FCI, acha, this kind of question was asked in the examination probably this November only. They gave a question about East India Company. This was the company which actually enslaved India, looted our country for 200 years, and took away a lot of things from the country. Again, in 200 years of slavery, we had faced a lot of um, excavations of our precious stones and everything. So again, there were many things. But now from the point of accounting, East India Company was formed by the Queen. This is actually a chartered company, everyone. The companies which were formed, the biggest companies act existed at that point of time. Even Britishers had their own set of rules. If you will see now, our most of the acts and all had been developed later on only, because India, as soon as it got free, we had freedom, but poverty, illiteracy, then hard hit by the famines. There were so many things that were happening. So India had taken up many things which were existing at the time when Britishers were there as well. Even in the Companies Act now, there are certain cases which had been directly taken from the era of Britishers only. Later on, many Indian cases have also been added, but the contribution of all those things are definitely there. If you'll go up, if you are studying Companies Act now, it starts with Salmon versus Salmon. That's a case again. There is not an Indian case. That's a case which has happened in terms of the UK only. So that is something. There are many cases, not only this, but when we talk about Companies Act altogether, that was initially that we has to be following. The base of it was under the chartered. Charter means the company's rule, the queen's signature. So that is a kind of queen signature based company. So East India Company was a chartered, so FCI is definitely not one of these. It's not a private company. It is not owned by the general public. It's not a holding company. It is not holding any other company. Matlab, it doesn't have a control over any other organization. Then let's talk about statutory company. Statutory or statute based companies are those companies which are law based. ठीक है ना? These are law. Okay, these are law based. The law prepared this company, and its power is derived from the law itself, right? Which one of the following is not the list of statements which form the complete set of statements as per Ind AS? Statement of equity changes, it is required. Statement of P&L required. Then we have comparative information of previous accounting period, that is also given. The statement of changes in assets, this is not given. Answer is B, everyone. Hello everyone, welcome to Officer 24/7. My name is Niharika Valia Bhatnagar and I'm with you with the area of AFM. Okay, so what are we going to talk about? Today we are going to talk about Module C. We're going to talk about the financial management and overview. So today we are starting with another module, another set of questions. So let's quickly move on and hurry. Actually, everyone, one more thing. If you are starting with your journey for JIB and if you are watching this video for the first time, then what you can do is, if you like it, then please click on the like button along with the subscribe to our channel. Acha, one more important point, and the most important rather, the sale has begun. Currently, oh, you will get 81%. You will get 79% if you are purchasing any of our JIB courses, be it Mahapack, be it all the courses, and you will get 80% discount if you are using it by purchasing it through our app. So what you can do is, if you are thinking about planning for JIB or your JIB plus CIB, your goal is set, then please go ahead and enroll in the courses as early as possible. Purchase a specific course before time, so that I think from the 10th of January we'll be starting with our PPB batch for this particular attempt. So it's way better that the next session, once you're beginning with the classes, then why don't you start it from the very beginning itself? Why to delay and have the classes by the end? That adds up so much of pressure on you now. So why to put yourself under that? So if you're looking forward to it, then enroll yourself as early as possible. Hurry up and purchase it in the price where you get it for a lesser price, because time is money. So save your time, save your money, and start your preparation now. Okay, everyone, as we have talked about this topic, is this particular chapter very, very important? Somehow, I don't think it is very, very important, but it is required to know what kind of organizations are working. A few of the questions are something which I expect in the examination from this financial management chapter. This is more or less a pure theory chapter, nothing practical. So more or less you get a particular time where you can um, do the easy questions first, you know. Let's begin. Which form of business organization is often preferred for professional services like law or consultancy, right? So what would be the answer? Sole proprietorship means one particular person. Then we have partnership, where we have two or more persons working together. LLP is where a partnership where they define the liability. And the last is Hindu undivided family. HUF is something which they are talking together. And a Hindu undivided family or HUF is something where we talk about um, the families which are having a family business which is run by three set of generations of the family members. That means grandfather, father, and then the son, or you can say the grandson of the family. So these three generations normally take care of the Hindu divided family business. Okay. Now, what's going to be the answer, everyone? One which is preferred. Normally, when we talk about law or consultancy based firms, na, they prefer forming LLP now. Earlier, partnerships was in trend, but now organizations have started moving towards LLP. If you can uh, reduce the stress of your investment by putting a limitation to it, कि ठीक है ना, after this amount I will not give any further, then the clarity makes your working easier, the working of the organization easier, and you can uh, do the things in a better way. This LLP. Okay. Then comes the next point. Which of the following business organizations is associated with the concept of karta? Sole proprietorship, partnership, LLP, or HUF? If I talk about HUF, na, the eldest male of the particular HUF is known to be the one who rules the organization. So that is what we call, in this case, the correct answer is going to be HUF. The eldest male is the Karta. He is the decision maker of these kind of families. And then that's how they take the decisions of the work. When we talk about the answer, what would it be? In this case, the answer is going to be HUF. The head of the eldest male of an HUF is actually known as the Karta, and everybody who's working under them, they are called co-parceners. When we talk about co-parceners, these are the people or the members of that business who are under him. Okay. So, co-parceners, earlier they used to be only males, now they are females as well. So HUF is basically covered under the head, which is Karta, and the people or the members are called co-parceners. So proprietorship has only one person, and the people who are in partnership firm are called partners. And in the limited liability partnership, it is also partners only. The terminologies of HUF are a little slightly different, and they don't even use the money which you are making on your own. It uses only the money which you are inheriting from your ancestors. Then comes, according to the Indian Partnership Act, what is the essential element that defines partnership firm? LLP, maximum number of partners, and then agreement to share profits or separate legal status. One of the most important elements is agreement to share profits. They actually prepare a specific partnership agreement where they define their amounts that they would be showing in their books of accounts. Share of profit is going to be that equal, or whether it is going to be something where it will not be equal. It can be, though two people can have 2:1 ratio of their profit. That means if the organization has earned 3,000 rupees, so it's going to be 2 by 3, and it's going to be 3,000 into 1 by 3. When we have this kind of situation, now this is basically how we define it. So this is 2000 and this is 1000. Done. For the purpose of AOP or the body of individuals treated as a separate entity under the Income Tax Act, legal recognition, limited liability, tax assessment, or profit sharing. Legal recognition, limited liability, tax assessment, or profit sharing, everyone. Body of individuals or AOP. There's a difference between both of these as well. पता है? मतलब it's just written or, but this particular uh, or these types of organizations have also a silver lining. AOP is where any person can be a part of that club or the basic organization which they're following. While body of individuals has natural persons only. You and I can be a part of that only, not a company or a partnership firm, because they are artificial. So when we talk about this organization, it is treated as a separate entity under Income Tax Act. For what purpose it is? For legal recognition, for limited liability, or tax assessment, or profit sharing. It is done for tax assessment. AOPs and BOIs have their own PAN cards. Okay? So they have their own legal identity, which makes that particular organization bound by the rules of Income Tax Act 1961 as well, along with Companies Act. They are following two rules. Acha everyone, here comes a question of reasoning and assertion. Assertion says that deciding the capital structure or the composition is crucial. Acha, today's classes, actually, today I'm going to deal with a lot of reasoning based questions, statement based questions. A lot of these things are there. So please go ahead and share and like the session, everyone. Uh, your motivation is more important to me, because that keeps me going for these classes, and your appreciation is something that keeps me going and trying to do something different in the classes, just because you are being supportive towards me. So please go ahead and keep showing the appreciation and the affection that you have showed me till now. Okay, everyone, deciding the capital structure. Everyone, first is deciding the capital structure is crucial. The decision of capital structure impacts the firm's ability to to service debt and earn profit. In this case, what is it that we are going to do? This helps the business to work a lot. If we do not work a lot, what will we do? Both assertion and reasoning are true. The reasoning is correct, or explanation of the assertion in this case is assertion and reasoning both are true, but reasoning is not the correct explanation. Assertion is true, but reasoning is false. But then what is capital structure? We decide what amount of um, money that I should put from my own account, and what is the amount that I'm taking from the lenders. I ask someone, sir, I would like to have some money. Please give me some money. When we are taking some money from someone, that is a part of the uh, reasoning portion. That is a part of how the business operates, because you have to decide now how much money I already possess and how much money I should take from others. So in this case, the answer is actually A. Both are correct. First of all, you decide the capital structure, and just because of this basis, you decide to service debt and earn profit. The answer in this case is going to be A. Both assertion and reasoning are true, but the reasoning is correct explanation of the assertion. Next question, we have assertion and reasoning again. Financial decisions in a firm primarily involve acquiring and utilizing capital funds for meeting the financial needs. Reasoning, the management committee elected by the members is a key aspect in the financial decision making process. What's going to be the answer, everyone? Both are correct, both are not correct. Assertion is true, reasoning is false, or both assertion and reasoning are false. Financial decisions in a prime firm primarily involve acquiring and utilizing the capital funds. Indeed, it is. Whenever we are working, the management committee elected by the members is the key aspect in financial decision making. No, this is not true because when we talk about money is the main thing for working. You decide from where you're getting the money so that you can actually utilize it for your assets. That is true. But there's no management committee rated by members low and so. It is always the organization is required to think about what it has and what it still has to get now. So financial decisions are related to the area of this, and this is taken by the initially taken by the promoters, and then it is taken um, in the shareholders meeting as well, in the AGM. If it is super important, then we conduct an EGM, emergency general meeting as well, where we are going to sit down and talk about ki, sir, dekhiye, this is what the organization is thinking and we are getting stuck here. Please let us know how to work upon it. Done? Acha. Okay. The next question is, why is deciding the capital structure composition crucial for success of an organization? Capital structure plays a very important role, but because the perfect blend will make sure that the both debtors, the lenders as well as the owners are happy. If you pay more to the lenders as interest and payment, principal repayment, and the owners are sidelined, the owners are going to feel terribly bad about it. That creates a lot of problem. What is the key objective in choosing the source of finance? Ensures proper utilization, influences profitability, determines legal status, minimizes capital requirement, mutual assistance and service, and lastly, market share objectives. Why is deciding the capital structure composition crucial? Capital structure is super important. If you don't know what's gonna happen, then what will the debt might be more or the equity might be more. Anybody among them who's creating fuss about it, then you're gone, you're doomed. The organization would be pressurized from both the parties and nobody would be happy. Ultimately, it's the organization itself which is going to be suffering. In this case, the answer is B. It influences the profitability of the organization, because if you pay more towards the debt in terms of interest repayment, your profit goes down. The sustainability and optimizing the weighted average cost of capital. Now, debt is going to ask more, so your weighted average cost of capital is also increasing because debt is more and the cost paid to them is also more. What is the most crucial financial decision? Everyone, what is the most crucial financial decision related to the long term funds in the firm? What would be the answer, everyone? Estimating capital requirements. Then, next is the capital structure or composition, deciding on sources of funds or long term investment decision or capital budgeting. What would be the answer, everyone? The most crucial financial decision. Most crucial financial decision is estimating capital requirements. Indeed, it is. We need to know what amount of it. Actually, not only the capital, but we want to know what is the perfect blend. So I'll still go with the long-term investment. Acha. In this case, the answer is actually long-term investment decision makes sense even because capital budgeting is what? For example, Reliance decided to put up a industry in Gujarat for 300 crores. It cannot say, oops, sorry, I think we made a mistake. We should not have made this particular industry here. You spent 300 crores. You just cannot look back. That's why when they say that you're taking the long-term decisions, then you should be absolutely clear about that. That is what they're talking about. Then comes the next question, everyone. What distinguishes a cooperative society from others of the business organization in terms of objectives, profit making, mutual assistance, then capital contribution, and the last one is the uh, last one is legal entity status. Cooperative society from other forms of business. Cooperative society is basically something which doesn't work on money basis. It's an organization which decided कि नहीं, we are looking forward towards the society upliftment, social development. We don't care about anything else, and that's how they actually worked, है ना? So the cooperative societies are basically something which are related to that. uh the mutual assistance and service, mm, capital contribution and legal entity status. अच्छा, legal entity, वैसे तो legal entity is also there. Cooperative societies are covered under Cooperatives Act. Then this is also following it. Capital contribution is not the point. Profit making, normally cooperative societies are working for the upliftment. They are they are for the benefit of people there, farmers, the 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 general public. They make the societies and all for the people belonging to a specific for example, LIC made it for their employees or any other specific employees who are doing this. And that can happen. Then profit making is definitely there. But I think, yeah, there is one particular thing that is mutual assistance and service. It's one of the, actually, this is the most important core of it. The point is that the people in the corporate society are working together and then thus achieving their goals. There is the most important thing is service. Then next question, which method is not mentioned as an investment for IRR? NPV, IRR, payback period, or budgetary control? In this case, there's one point which is definitely wrong. That is budgetary control. It's a separate sect. In terms of it, you will be covering it at costing. Then these three are covering, these things are covered under capital investment decisions. So technically, this is wrong. The payback period is not the point. Evening, everyone. Welcome to Officer 24/7. My name is Nihar Kavalia Bhatnagar, and I am with you with the area of AFM. I hope I'm clearly audible as well as visible. Okay. Uh, if the session has been helpful to you, if the series entirely has been helpful, please go ahead and share this session along with this, like it as well. And if you haven't subscribed to our channel yet, then please do the same as early as possible. Okay. Now, as I told you, the next series has begun. That means we have started with our module B. है ना? No, actually, we were done with the module B even. We have started with the module C. The module C, we have now moved towards the one of the most important chapters, that is ratio analysis. A chapter which is always asked in the examination. That too, not for some smaller amount of numbers. Ki the marks are little less that you can look forward to it, you can miss it out. No, you just can't. This particular chapter is super important due to its weightage in terms of case studies as well as the individual MCQs as well. Done? So let's begin with acha. I hope now it is visible. Visible everyone? Super important plus case studies plus important MCQs. Matlab I expect at least 5 to 6 marks for your examination would be from here itself. Done? Okay. Then let's begin and start with our topic, ratio analysis. This is one of my favorites. The reason is ratios is overall divided into uh, the following parts. That is number one, liquidity ratios. Liquidity ratios means those ratios which are related to the area of liquidity. Second is solvency, liquidity, solvency. Third is profitability and market test. Then is turnover ratios. And there are some miscellaneous ratios as well. So you will find all these specific bases on which we define our ratios. So on this basis, you will be able to find out what we do about the entire area of ratios. Matlab ratios is basically finding a numerical relationship between two or more items. And while finding those numerical relationships, what are we doing? The numeric relationship is defined and understood uh, regarding the ups and downs. Maybe it has gone up in the last few years, maybe it has gone down, or if I say they have some ideal ratios as well, ki nahi, this ratio should be of this particular amount only. That's also something that you will find in ratios. So that's the basic crux, a little um, in-depth information regarding ratios. Okay, now here comes the first question, everyone. Today I have covered good number of questions and many of them are taken directly from the IBF book itself. Matlab, as it is, the questions which are given in the book, I'm starting with those ratios, those questions, so that you understand what kind of questions are there in the book itself. The basic purpose of the series is to let you know what kind of questions are asked in the examination. So I am covering the entire book, strictly covering the entire area, whatever has been there in the examination, based upon the previous year questions plus the IIBF book material, so that you don't have a problem in terms of understanding what kind of questions are normally asked in the exam. Okay, everyone, here comes the first question. Accounting ratios help in interfirm comparison, intra-firm comparison, comparison with industry norms, or all of the above. Actually, accounting ratios is one of the tools of financial statement analysis. It's a tool for financial statement analysis. Interfirm, intra, comparison, all. The answer is all of the above. Okay? The answer is all of the above. Now, second point, debt service coverage ratio. I think this is somehow they love this ratio. Why do I say this? Because this particular ratio was asked in promotion exams. This particular ratio was asked in our regular exams as well, in our examination of JIIB as well. So I think I have seen this particular ratio having its importance like anything. And this is basically a ratio which is very judgmental. Why do I say this? Because when we talk about debt service ratio, na, it's gonna ask the person, Hanji, do you have the capacity from your profit that you can pay off your debts as well, so your interest? If you can, then only I'll say ki nahi, you should be taking loans. This particular ratio talks about the area of ability of someone to repay the loan or not. So based upon this, what would be the answer, everyone? Judging the margin of safety available before there's a default in repaying the loan, judging whether the firm has borrowing disproportionate in its net worth, judging the capacity of the firm to service the interest on debt, or all of the above. It's not all of the above, because margin of safety and the capacity of the firm to service is just not something which they choose. In this case, there's only one point, that is B. That is judging whether the firm has borrowing disproportionate to its net worth. Okay? The answer is A. नहीं नहीं judging whether the company has नहीं, the answer has to be A itself. Margin of safety regarding default and repayment. नहीं, it is related to repayment of loan only. So the answer is A only. He talks about disproportionate borrowing. It doesn't talk about disproportionate borrowing. It asks you that what is the profit you have, and in context with your principal plus interest. Any kind of principal repayments that you have to make, or any kind of interest repayments, that is why it is called debt service. So you have, if before the default of repayment of the loan, what is the amount that you normally have in your pocket? Which one of the following is true, everyone? Both earning per share and PE ratio vary with stock market price. While calculating DE ratio, fixed deposits from shareholders are taken part of debt. While calculating quick ratio, current liabilities are not taken into account. This is not true. Debtors turnover ratio is higher if the company sells more goods on credit basis than on cash basis. Earning per share is related to the area of earnings of the organization, and PE ratio is based upon the market price of the particular organization. MPS upon EPS is the PE ratio. So I believe the first one is definitely not something that we can choose. Okay. So this is also not true. Uh, The debt equity ratio, I think this is correct. Why? Because debt equity, in terms of debt, what will we do? Debt is basically the long term loans that we take. Those are called long term debts. The long term debts are a part of debt in this era. So, in this case, the correct answer is B. While calculating debt equity ratio, fixed deposits from the shareholders are taken as a part of debt. Which one of the following is true? Higher debt equity ratio increases the profit margin of the company. Debt equity ratio is an indicator of solvency. A high current ratio is always an indicator of efficient management, or depreciation is not an expense, should be excluded from while calculating profitability ratios. Okay. When we talk about debt equity ratio, na, debt equity ratio will be higher if we get more debt. It is related to the era of solvency ratios. Acha, haan, there is one more point. I'd written solvency ratios already. Yes, I didn't miss it out. I was thinking I missed out the solvency, but we did it. Acha, now the answer in this case, it is an indicator of solvency ratios. वैसे तो it is related to the area of solvency, but a high current ratio is always an indicator. A high current ratio is not never an indicator of efficient management. High current ratio simply means that sometimes you have kept too much of liquidity in terms of your organization, which is definitely not correct. The answer is B only. That the debt equity ratio is an indicator of solvency of a company. It's B. Given? Which one of the following statements is correct about fixed assets ratio, everyone? It is ratio of fixed assets and net worth. It is a ratio of fixed assets and long-term funds. It is a less than a ratio of less than one indicates short-term resources have been diverted for creation of assets, or none of the above. Which one of the following is correct about fixed ratio? Fixed asset ratio. Fixed asset ratio talks about the organization funds which are involved exclusively in the area of the assets. So this is basically the assets that you have built with your long-term funds. The answer is B, everyone. It is the ratio of fixed assets and long-term funds. Done. Here comes the next question, everyone. This question relates to the area of net profit can be greater than operating profit. When the net profit can be greater than operating profit? Actually, operating profit and net profit has two differences. It has only one major difference. Operating profit talks about only and only that part of the profit which the organization is making because they are working. They are working, they are operating their business. So operating profit is the money exclusively generated from the business, while net profit is the general funds that you are generating. Then what would be the answer? Cost of revenue from operations is more than operating expenses. Operating expenses are more than non-operating. Non-operating expenses are more than non-operating income, and non-operating expenses are less than this. Okay, when we talk about the operating profit is more, that can be more because the non-operating expenses, the ones which are related to the businesses which are not because you are operating in the business. That means it is not related to the business. You might have got some money in the business and you would have put it in the FD. Now from an FD you will receive a good interest. What is the expense? There is no expense in it. So in this case, what will happen? More of non-operating income will be added and non-operating expenses almost nil. है ना? So in this case, the correct answer would be where your non-operating expenses are more than the non-operating incomes. Answer is D, everyone. Then here comes the next question. The question says opening inventory of a firm is 80,000, cost of revenue from operations is 6 lakh, ITR is 5 times. Its closing inventory it will be 1 lakh 60, 1 lakh 20, 80 and 2 lakh. Opening inventory is given, cost of goods, cost of revenue from operations is also given, but they haven't given that part. Okay, let's try this question. Your ITR is equal to COGS upon average stock. Your COGS is given, which is of 6 lakhs. Your ITR is given, which is 5. But your average stock, for the time being, I'm taking it as I don't know about. So then you take average stock on the above side. Then it will come out to be average stock is equal to 6 lakhs divided by 5. So that would be 1,20,000. Now this is the average stock. Average means first year plus second year divided by 2. You know? So this is basically 1,20,000 is the average, which is opening stock plus the closing stock divided by 2. You know? That is how we find the average. So in this case, our opening stock was of no issue. The value is of 80,000, everyone, plus nil. Actually not nil, we don't know about it, so I'm putting it as the number x. And when we talk about the value of this question, it is 80,000 plus closing stock divided by 2. Now from here we will calculate the exact answer. This will turn out to be 2,40,000 minus 80,000 is equal to closing stock. So the closing stock comes out to be amount of 1,60,000. Done, everyone? Just look at the question. I hope it is helpful for you. Just give a quick look to it. You will be able to understand the concept. And let me know if you're all done with it. Done, everyone? See, in this case, first of all, I had to apply ITR, then I had to apply average stock formula, and then we calculated the entire situation. Then we calculated the entire answer, right? Done, everyone? Let's move on towards the next question. This was 1,60,000. Acha, ROI is calculated under liquidity, solvency, profitability, or activity. Activity is also called activity turnover ratios, everyone. We have talked about all these ratios already. Return on investment means whatever money I have invested in the business, in how much, what is the amount of return that I'm getting from that amount that I've invested. What would be the answer, everyone? Liquidity, solvency, profitability, or activity? The answer in this case, ROI. ROI is based upon profitability, everyone. ROI is basically your profit divided by the capital invested multiplied by 100. So the percentage which you get is called profitability ratios, because you're talking about the returns that the organization can make from their business. Done na? So profitability ratios are those ratios which are related to the profit of the organization. How much profit they are making after investing good amount of money in the business. Next question. Assertion and reasoning based, everyone. Liquidity ratios are used to assess the short term financial obligations of the firm. Current ratios and asset test ratios are two liquidity ratios which measure the firm's applicability to meet its current obligations in time. In the context of the above two statements, which of the following is correct codes? Both are correct, but R is not the correct reason. Both A and R are correct, but R is not the correct reason. Then we have only reasoning is correct, or both are incorrect. Think about it, everyone. What would be the answer, everyone? Liquidity ratios. Liquidity ratio is just to find out whether the organization can pay off the loans or not. On a shorter basis, will they be able to do it? Then when we talk about current ratio and then the asset test ratio, these are both liquidity ratios which talks about in how much whatever money we have in terms of the payments which they are making, right? Asset test ratio or current ratio talks about the current assets which you are holding for less than 1 year are covered under this. Done, everyone? Everybody, no idea? When we talk about liquidity ratios, it is related to the short term funds only. And current and asset ratio is also related to the area of the short term. All these ratios are covered under liquidity. So they technically both are correct. The reasoning as well as assertion, both are absolutely correct. There is no mistake in it at all. Everyone, current ratio is liquid ratio, liquid assets upon current assets, fixed assets upon current assets upon current liabilities, or liquid assets are divided by current liabilities. Current ratio is current assets upon current liabilities. So the correct answer in this case is C, that is current assets divided by current liabilities. Acha, everyone, if the GP ratio is 20%, goods for 50,000 sold to employee at the cost which will decrease the ratio. There will be no change in gross profit ratio because both the cost of revenue and revenue from operations will be increased by the same amount. You know? What will be the answer, everyone? Is it both are correct? Both are incorrect? Then everyone, what would be the answer? GP ratio based upon production. NP ratio based upon the sales that you are making out of that production. What would be the answer? Go ahead. GP ratio is basically the ratio which is strictly related to the area of a trading account, while NP ratio is something that gets into the answer in this case is actually both are in terms of this A is correct and the reasoning is not correct. The reasoning is definitely correct because uh, there's a there's a growth which is somehow lopsided in our country, where you will find that in some areas there is an access to all these things, but when we talk about the other areas there can be scarcity as well, है ना? Done, everyone? Everyone, A is correct but R is incorrect. Done. Hello everyone, welcome to Officer 24/7. My name is Niharika Valia Bhatnagar and I'm with you with the area of AFM. Acha, as promised, I had promised you yesterday only that I'll be taking up ratio analysis, at least two classes. So, keeping up the promise, I'll be further discussing the topic of ratio analysis today itself as well. From tomorrow onwards, I'll change the particular topic further. So, everyone, we did the various kinds of ratios yesterday. There are 4 to 5 kinds of ratios. Do you remember all of them? Okay, let's have a quick recap. The first ratio is called liquidity ratios. The ratios which are related to the area of uh, the working, in which we are talking about liquidity is about the money that we are giving to the people now, or we are receiving within a year. That is liquidity. Second is solvency, whether in the long term the organization is solvent or not. Liquidity, solvency. Third is liquidity, solvency. Then is market test. Then is profitability. 1, 2, 3, 4. Done. Fifth is turnover. And sixth is miscellaneous. These were the 6 types of ratios. One of the most important ones is solvency, turnover, liquidity, and a few of miscellaneous as well. They are normally asked a lot. Market test is not something I've seen a lot, and not all the ratios are very important for you. Overall, there are 24, 25 formulas for ratios. So yes, there are a lot of things to work upon in terms of ratios. Acha everyone, if you like these sessions, then please go ahead and share it among your peers, and at the same time like it as well. And if you haven't subscribed to our channel, then do the same as early as possible. One more thing, my new AFM batch has just started. It started yesterday itself. Matlab today is the first paid class. So if you are there, then it is starting it is at 7 p.m. Many of you won't be there now. So what you can do is, since we are having this class at 7:30 today, so that means what you can do is you can watch it from 7 p.m. to 8 p.m. And this particular video is also available on YouTube as well. So after the completion of the class, you can review it. This batch is at 7 p.m. to 8 p.m. every evening. So what you can do is you can join this particular batch and work upon your AFM properly. As you already know, 35 chapters overall, 35 units are there on almost 628 to 633, total 633 pages are there in the book. So if you are looking forward to enroll yourself in my AFM batch, then please do the needful as early as possible, because any kind of delay would mean that you will have to go through the basic topics on your own or through the recordings. Right now I'm starting with the live batch, so why don't you go through the live batch? The live batch is way better, na? So that's it. So make sure that you are enrolling yourself as early as possible. Now let's move on and start from where we were talking about. Done, everyone? Chaliye, then let's begin. The two basic measures of liquidity ratios are, what are the two basic measures of liquidity ratios? Liquidity means how liquid we are in terms of the work. Liquidity is basically related to the area of how much, how frequently can you pay, matlab, or you can receive. Can you pay or receive within within one particular year, less than 1 year or one operating cycle? If you receive your money, then your work is sorted. If you do not receive the money, then there is a problem. Okay, right? So for example, I won't wait for a good amount of time when I have to receive money from the debtors, isn't it? If I'm supposed to receive money from the debtors, then I it should be within that one particular year itself. Now, if the debtors are paying by more than 1 year, it is such a big problem for you and me. Why? Because if these people are going to take so much of time, then what's the fun? For a business, it is actually a troublesome situation, isn't it? That it will take so much time to receive the money, so liquidity gets affected, the cash in hand which they will be having. Then so liquidity ratios are these ratios. So among these, what is the ratio that they're talking about in this area? How do we specify? Liquidity ratios are basically inventory and current. No, inventory is a turnover ratio. Inventory turnover ratio means that is to the sales that you are making in the business. Then we have current ratio and quick ratio. Current ratio and quick ratio both are liquidity ratios, so I think this would be the answer. Next is gross profit and operating profit ratio. Operating profit and gross profit are profitability ratios, and current and average collection period. Average collection period is also a part of turnover ratios. Only current ratio is the one. So in this case, the correct answer is actually B, everyone, as B is current ratio and quick ratio. So the correct answer is B. The answer is B. Done. So that is current ratio and quick ratio. The excess of current ratio is also treated as a sign of managerial efficiency, inefficiency, or none of the above. Excess of current ratio matlab we are having too much money in our cash form. But the problem is that if you have too much money in your cash form, why are you having so much of money in your cash form? You are not getting any returns out of it. If you would have given this money to someone else, maybe you would have received a good amount of money, but you didn't. What are you doing with this money? You are keeping it in your business itself. And slowly, slowly, this loss is basically borne by you, and what will happen? It will scrap off all the savings of that business. Over the period of time, when he keeps on hiding those things, things can become manifold. So when we talk about the area of debts and equities, now it is very, very important that whatever cash we already have, uh, we do not devalue that part. We should spend money on all these things very, very carefully so that the returns are definitely something that we can look upon. You know, so in this case, it is talking about the inefficiency. You could have used specific money for the business, but where they are using it in order to look forward towards the inefficient areas. This money is not used in the business at all. This is basically something which is just idle. It is there in the cash form and you are not making any money out of it, which is definitely not useful. So the answer is inefficiency, everyone. Done. Now comes the next point, inventory turnover ratio, or inventory ratio is the relationship of. It's an important turnover ratio. Everybody? Inventory ratios is basically the ratio of your cost of goods sold upon your average stock. This is basically defined as the opening and closing of this part, है ना? Technically, inventory turnover ratio is that specific ratio in which we would be uh, we would be looking forward towards inventories in such a way that the organization head would be looking forward towards the person who has helped, and then they would be asking the address and everything. When we talk about the area of inventory turnover ratio, now inventory turnover ratio talks about whatever finished goods that you are preparing, starting from raw material to finished good. How did we go through it? The cost of goods sold and cost of average inventory, cost of goods purchased and cost of average inventory, cost of goods sold and average cost of average inventory and shield, and the cost of goods purchased and cost of average inventory. Now this is, as I told you, it is COGS upon average stock. That means we would like to know how much of our stock is left by the end of the day, and opening and closing stock is basically taken as a mean there, and then we compare it with the goods that we have purchased and we have sold. That is cost of goods sold divided by cost of average inventory. Acha everyone, here comes a numerical question. The numerical question says that the cost of liquid assets are 5 lakh rupees and its current liabilities are of 3 lakh rupees. Thereafter, it paid rupees 1 lakh to the trade payable. Quick ratio will be what? Everybody, what would be the value of quick ratio? Okay, quick ratio is also known as acid test ratio. When we talk about quick ratio or asset test ratio, this is quick assets upon current liabilities. Quick assets are those assets which are simply something which can be converted into liquidity within no time. It includes all the current assets except two things. First is your inventory and your prepaid expenses. So this particular area does not include, because inventory takes a lot of time. It is not sold within a day, so there is no point of fighting over it. And when we talk about the prepaid expenses, same thing goes with the prepaid expense. If I paid for if I paid for a particular, I paid for my phone. I have a prepaid. I have a prepaid SIM. The moment I get a prepaid SIM, what will happen? The value of the prepaid SIM would be noted. है ना? Prepaid SIM would be, maybe I got a particular plan for 600 rupees and that's for 3 months. So for 3 months I've paid in advance. Can I go to Reliance and can I go to Jio and say that, sir, can you give me the money for 2 months back? I just wanted to pay for 1 month and the rest I was thinking to close down. Will they do anything? No, they will not give you the money back. So prepaid expenses once paid, that you won't get that money back. So technically you will have quick assets divided by current liabilities. So can we do this in this area? We have liquid assets as rupees 5 lakh. Then we have 3 lakh. And thereafter it paid 1 lakh to the trade payables. That means if we have paid, so 1 lakh from the cash is gone. Then when we talk about the current liabilities, the creditors are also lessened. In this area, it turns out to be 4 lakh divided by 2 lakh. It turns out to be 2:1. है ना? Can you see the 3 lakh? See, from the quick assets, you are paying the cash. And this is what your trade payables are. The trade payables are paid off. है ना? Technically, the value will turn out to be 2:1. It is actually getting better. Always remember, if you have a lot of liquid assets, that means you are not being wise. Why are you keeping so much of money? Keeping such a big amount of money is not sensible at all, right? This much amount of money, when kept in the business, in the flow of cash, there is no return of it. The money which is kept in a which is kept basically kept in boxes, and it is which is kept in lockers, will not multiply. The money which is rotating in the market will multiply, right? The dash may indicate that the firm is experiencing stockouts and lost sales. But the company's average payment period, inventory turnover ratio, average collection period, or quick ratio. Which particular ratio among the following states that, everyone? the ratio which talks about the area of the stockouts as well as the loss sales. Average payment talks about the money that you are paying to the creditors. Average collection is the money that you receive from the debtors. So this is related to the creditors. This is related to the debtors. So in this case, the correct answer is inventory turnover ratio. Under inventory turnover ratio, that is the movement of inventory. So if we have a lot of movement in inventory and it is being stock out and all, then it means that our inventory is being sold at a very high pace and we are falling short in terms of predicting the future of our product. Stockouts will create a negative point for the organization, that whenever you go to the organization, there things are always stock out, which is not good for the organization. At one point of time, it can show it to the people that maybe the organization is so good that it gets stock out, but at the same time they can see that the organization is fake because there should not be a stock out, and but they are still showing. This can be both the ways for the organization. Again, when you are trying any tactic in terms of the finances, now sometimes it can go positive and sometimes it can go negative, but there is no point where it would be the same. Dash are specially interested, I'm sorry, in the average payment period, since it provides them with the sense of bill paying patterns of the firm: customer, stockholder, lenders and suppliers, and last is borrowers and buyers. When we are talking about this, the average payment period, everyone, the average payment period, since it provides them the sense of bill paying pattern. Acha everyone, when we are talking about average payment period is the amount by which the payment is made to the uh, billing patterns, na? Yes, the amount which is paid to the creators, to the lenders overall. So basically, this is related to that area. But when we talk about the average payment period in terms of with a sense of bill paying, the bills are normally paid to the lenders and suppliers only, creditors only, na? We receive money from the debtors and we pay money to the creditors. Simple reason, payment is to be received from the debtor and the creditor is always on the credit side. Done. Next question. Which ratio is not a part of solvency ratio, everyone? Current debt to equity, total asset to debt ratio, or proprietary ratio? What will be the answer, everyone? What is the which is not a part of solvency ratio? Solvency ratio talks about the money which is paid, which can be easily paid. We have money to pay it off. The answer would be current ratio. Current ratio is liquidity ratio. The answer is liquidity ratio. This ratio is liquidity, rest everything qualifies for solvency. So in this case, solvency talks about if you had been asked to give me a certain amount of money, can you pay me that specific amount of money or not? If you are supposed to pay 10 lakh and you are able to pay me 10 lakh within 3 months as per your promise, then what will happen? You would be respected. And if you do not do that, then you would be then the organization will have to specify, na? Solvency is all about whether you can pay off your loans in a proper way or not. Then you have the total assets, total liabilities, current liabilities, and total assets to debt. They have asked your total assets to debt ratio. What would be the answer of total assets, everyone? What would be the answer, everyone? Total assets is 7,70,000. What would be the answer? What would be the answer, everyone? Total assets divided by debt na? Debt is only the total debt or long-term debt? It would be total long-term debt only. The short terms aren't its responsibility. What would be the answer? In this case, the total liabilities are given. The total liabilities are of 2,60,000, everyone. Let's look at this. 2,60,000 is the total liability. From the total, you remove the short term. Short term is of 40,000. So what are you left with? 2,20,000, which is pure long term. है ना? Because the short term are removed, this is your pure long term. And now divide the entire salary there, that is the entire total borrowers and anything else that we're looking forward to, then it would be 35, this amount of 7 lakh 70 would be taken now. Let's see. 7 lakh 70 is the total assets, and our debt is only the long term. है ना? Or no short term involved. This is 2,20,000. So this has to be 11 sevens are 77 and 11 twos are 22. That made us in this area. It turns out to be 3.5 is to 1. Why, everyone? It is 7 lakh. It is 7 lakh 70,000 divided by 2 lakh 20,000. So based upon this, the answer is 3 is to 3.5 is to 1. What would be the answer? The answer is 3.5 is to 1. Everybody got the idea? Whenever we are calculating these na, always remember total, this was total asset to debt ratio. Total asset to debt ratio, you don't have to learn the ratio, the fun part, because the ratio is already specified. Let me show you again, everyone. In this case, the debt includes both long term plus short term. The total liabilities are 2,60,000, out of which the short term are 40,000. So can we calculate the long term, everyone? The long term will be 2,60,000 minus 40,000 is equal to 2,20,000. Once you have got this 2,20,000, then utilize this 7,70,000 divided by 2,20,000, giving you an amount of 7,70,000. That is 7,70,000 divided by 2,20,000, giving you 3.5 is to 1. Let's go for another question. The following groups of ratios primarily measure risk. Among the following, which measures the risk, everyone? Liquidity, profitability, activity, liquidity, activity, common stock, liquidity, activity, debt, and liquidity, debt, and profitability. Measures risk. It is debt is very risky. Profitability, if we are not making good profit, then there's a very good amount of pressure on our heads. And then we have activity. Activity talks about how active we are in terms of our working. So that's it for the day, everyone. Before I end my session, I hope you have already enrolled in the classes. If you haven't, then please go ahead and enroll yourself, because the batch is starting from today itself. You will get enough time to study properly, otherwise you will face problems. Why to wait for that longer period to prepare properly na? Ki you should not leave it at the end. It is way better that you decide today and then you work accordingly. Acha, now let me show you our website so that you can go there and you can study accordingly. This is our website, everyone, www.adda247.com. Go on to the website, then check it out. There you have this area of JIB and CIB. click on the area of JIB and CIB, click on the area of the JIB May 2024. Here you will find our resolution and Shapath batches. Both the batches are out. You can look, you can see both the batches are here itself. What you can do is you just have to click on the area of buy now, use the code Y541 and you will get a discount of 78%. How do we get it, everyone? Click on the area of buy now, use the code Y541 and apply it. You will get a discount of 70 overall 79% discount is still going on, so you will get it at 4199.79. So this is a good option. If you are using our app, then you will get for 80%. So I think 80% discount is a good option that you can take up. So hurry up and check it out on our website and our app for further details. Do not wait for a longer period, because the longer you wait, ultimately what will happen is the preparation time would be less. So it's better that we become wise towards our studies and start working right away. So that's it for the day, everyone. I'll be meeting you in the next class. Thank you so much.